Before we get into it, though, a few things, housekeeping things I'd like to point to. First, I am going to be having another conference. You can see it. It's in my Substack. It's also, I put it in my feed on X. It's going to be on Wednesday, March 11. This is all focused on stock picking. We did one of these last July. The picks turned out to be phenomenal. But in order to make for a bigger audience, I've reduced the price sharply. It's only $99. That's right, $99. You can look at the list of speakers. I mean, it's nothing. There's 14 speakers. One pick pays for the $99 a million times over. I really need your support. I'd like to do this on a regular basis, twice a year, maybe 4 times a year. And you want to talk about democratization of finances, is a term I can't stand. Well, this is the right way to democratize finance. We're bringing, to the individual investor best ideas, no macro bloviation on and on. Well, we're overweight this, and we think Japanese GDP is going to do that, and blah 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 blah. It's all useless. Yeah, I'm sure you've listened to the share space is the same thing. It's like you listen, you waste, or a YouTube, and some guy comes on talking about strategy, and then even if you listen to 200% speed, as the saying goes, that's 30 minutes of my life I'm never going to get back. What do I do with that? And my good friend of mine, is the way he speaks about research. He put it's three types he puts in three buckets. One, there's stuff which is descriptive. It tells you what has happened. It's like reading the newspaper. And unfortunately, so much research is devoted to that. Then, more valuable is what's predictive. So, let's say, for instance, you read an article about, I don't know, interest rates. And they start telling you how the yield curve's done this, and short rates have gone down, and long yields have gone up, and da 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 da. And the move index, and the implied vol, and the position. Okay, great. So you get a headache from listening to all that stuff. That's descriptive. Then there's predictive. So Michael Kramer comes on, as I think he will, and is going to say, I think interest rates are going up. At least long bonds yields are going up. Okay. Well, what do we do? I think rates are going up. So what do we do with that? So Michael means long term rates are going up. I'm sure rates may go down because Trump cuts rates, whatever. But what do I do with that? Do I short bond futures? Do I short housing stocks? Do I buy gold? Do I short the dollar? So the prediction is that rates are going up. But then the prescription, how do I make money out of that? That's the most valuable part of the whole equation. And I ask each and every one of you, the next time you read something on X, or you listen to a space or a YouTube, ask yourself, how do I make money out of this? Okay. And most of the talking heads that you'll find, the know nothings, they just rehash what has happened. There's a guy, I want to be careful here. I'm told one can praise specifically, but should only criticize generally. But what the hell? He's such a windbag. I don't care anymore. Mohammed Al-Arian, okay? Completely useless. And he comes on with this accent, and he's head of Oxford or whatever the hell it is, all right? I don't think he would know Abidi if it bit him in the ass. And he writes all this flowery crap that appears in the FT, and he's on Bloomberg, he's on CNBC. And you listen to all this, it sounds good, but it's like, how do I make money out of this? And I'm going to embarrass Jack, nobody special. Jack's a nobody. But Jack tells you how to make money. There's a difference. So just say no to Muhammad Al Arian, all right? There are a million more where that came from. But you know what I'm talking about. So anyway, at this conference, 14 speakers, many of them appeared last time, some fantastic picks. Renaud Salur, Tom Chanos, Jim Chanos' brother, Tom Thornton, Adam Parker, Gordon Johnson, Robert Mullen, who you probably don't know, MRA Advisors. I'm going to embarrass him. I hope he comes in the room. I'm going to embarrass him. His fund was up over 100% last year. He manages a resource related fund off the West Coast, up 100%. Zach Marks, great stock picker. Enrique Abeta, great stock picker. Alberto, I don't know if he's here because he's in Europe or one of these places, but Alberto Alvarez, great guy, young guy. Jesus, he recommended the platinum ETF before it tripled, before all the knuckleheads on X, figured out what the ticker symbol was. So, Alberto, Motorhead, I don't know what he's going to talk about. It may not be Tesla. Tavi Costa. Tavi Costa. By the way, we have two gold resource guys coming on. We got Tavi and we got Don Durrett. Tavi has left Crescat. Don and he's going to doing his own thing. And Don Durrett, proprietor of goldstocksdata.com. You want to know about gold and precious metals and why it's going to go up a lot more from here? You heard me right. I'm not saying you got to buy silver today, but a year from now, 2 years from now, gold, I don't know, 6,000, 8,000, 10,000. And we can talk about where it's going to go. Silver, I don't know. Who needs Bitcoin when you got silver? In any event, and then nobody special. So this is as good a conference as you'll ever find. It's devoted to making money. I would ask everybody to please retweet what's in my feed. I want to get a big turnout. The reason I've priced it down at $99 is I don't want price to be an excuse for people not showing up. Last time was $400. The conference was phenomenal in terms of content. To be very candid with you, could have had a better turnout. But, you know, forget these Bloomberg hosted or Irish Zone conferences where some guy shows up and talks about, they do these fireside chat things and nobody says anything. And then they'll do a reflection on their career. It's like, yeah, I could interview Michael. I'm going to tease Michael as my friend. I could interview Jack also, but Michael, let's talk about your career and growing up and what was it like in Garden City, Long Island, and da 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 da. And it's like, who the hell cares? Like, Michael, sorry, but like that's not going to help me make money. I want to make money. You want to make money, all right? That's what this conference is for. So I'm going to ask everybody in this room. I'll put it up on the nest, but please retweet the announcement to the conference. I mean, it's just I can't do any better. You're not going to find a better conference, I promise you. If you want to make money, what this is all about, come to this conference and tell your friends about it. It's only $99. If you're not willing to spend $99 on this, then I can't help you. Then you're not serious about making money. A couple other things that I want to get to Michael. I got so many things to talk about this week. I spend, by the way, ladies and gentlemen, I don't just wing this. I actually sit down for a while and think about what I'm going to say. The hardest thing, actually, Jack, is what song to play. But actually, I think this OJ song may be the theme song for the show going forward. That way, I don't have to think about it. But it's when everyone wants to play Pink Floyd, Money, and blah. OJ is much better. It's not even a question. Um, Plus, all right, now I'm deliberately going to cause trouble. Plus, what's his name? Waters, the Pink Floyd guy, anti-Semite. So I don't want to play that song. But just rando things to talk about. JGB yield surging. Mike, maybe you'll talk about that. And the yen going to zero. What does it look like? I mean, trends look intact. I'm kind of amazed that it hasn't really had ripple effects on markets elsewhere. Maybe it's about to. So maybe in your rant, Mike, we could talk about JGB yields and particularly how it pertains to U.S. bond yields. Um, we're going to talk about AI and electricity. Jack's going to talk about that. And there's a lot else. Just a couple other plugs here. I released two interviews this week. One of Jay Pulaski on emerging markets and commodities. It's outstanding. And I say this, I don't give out praise like that normally. A lot of guys think I'm a jerk, but it was outstanding. If you want to hear the case for emerging markets and commodities, it's not just the what, it's the why, it's the drivers. And why Jay, who was correctly bullish on this stuff last year, thinks there's a lot more where this came from. We're in the early stages of this move. I don't like when people come on and talk about, well, I recommended this and I recommended that. Bullshit, okay? Yeah, if you want to mention it in the context of where we go from here, that's fine. Just so Jay doesn't think, he just discovered commodities, he just discovered emerging markets. But victory laps are not permitted. In any event, Jay lays it out really, really well. You can hear the interview, the replay on either my Substack or on YouTube. I strongly recommend that. One of the best interviews I've done in a long, long time. And then Motorhead came on. We did a recording about Tesla. And I know probably some of you are like, George, stop talking about Tesla. I've gotten those comments before. But if there was ever a time, if there was ever a time that Tesla might pay attention to the fundamentals, the stock price might follow the fundamentals, it's now. Um, we go through in great detail why the stocks may be only worth 60 or 80 bucks a share. That's the value. Doesn't mean it's the price of the stock. Value is not the same as price. Price is not the same as value. I can explain that to people if they wish. But fundamentals are clearly pointing to a lower stock price. Stock's been underperforming. Whether it catches down to where the fund to where value is, your guess is as good as mine. I've been wrong on that in the past. But there's no way, there's absolutely no way you can get to a number which is, well, it's 60, 80, 120, doesn't matter. To start the conversation, it's down 75%. And it's interesting. I had a conversation with Gary Black, who was one of the biggest Tesla bulls for years. You can find him, Gary Black, he's on X. And some months ago, he turned negative on Tesla. And of course, the fanboys hated him for it. But here's the point. And here's a guy who was bullish. He bought Tesla, in 2019, and even he's saying it's ridiculous now. So, you know, we'll see. And I guess, what are the catalysts now? We'll get into it later, but I think Tesla could easily lose money in 2026 and be cash flow negative, and that might catch people's attention. And for those who say it's not an auto company, it's always a pushback that I get, despite the fact that 87% of the business comes from auto and auto related revenue streams comes from those businesses. Um, the robo taxis, no robo taxis this year, not going to happen. Driverless paid ride services, not going to happen in 2026. We go into great details about why that's the case. And it's clear that Tesla's nowhere is nowhere with the Optimus and the robots. So, you know, your guess is as good as mine what the stock price is going to do. Don't listen to me about the stock price, but if you care about fundamentals, you got to listen to this. All right, enough of that. I got a lot more to talk about. Mr. Kramer, is it Kramer in the car? Where are you, Michael? Good to see you.
Kramer on the couch.
Kramer on the couch. All right, so no.
Except it's a K and a C. We do K and the C in the car too, I guess.
There you go. Kramer from the car. So,
Yeah.
Michael, how have you been? Happy New Year. New Year, same old, same old. So, people have not heard your dulcet tones of late. So kind of like reset the table here. Give us. You do a masterful job of touching on what's important and surveying the lay of the land. So, have at it, Michael. Maybe, Michael, a good place to start is I deliberately tried to trigger you with the JGB yield thing and bond yields. And you and I spoke the other day. We both think U.S. yields are going up. But maybe talk a little bit about JGB yields. What's the chart look like to you? Fundamental drivers. Where do you think we go from here? And more importantly, what does it mean for U.S. bond yields, currencies, gold, and the U.S. stock market? So, Michael, I'm going to cease and desist. The floor is yours.
Okay, I'm gonna do my best. I'm still recovering from the Bills loss last night. So um the I mean, yeah, Japan, obviously, it's interesting to see how you're seeing like this uh the stock market move up while the currency weakens and rates go to the moon. And it's kind of an interesting dynamic that uh, is kind of confusing at some point. It's some in some ways, and the more you watch the price of silver and gold, the more I'm beginning to think that what you're seeing there is some sort of hedge against Japan imploding. Because at this point, you can't even chart the JGB yields because half of them have never traded this high in their history, right? And so there's nothing really to comp them against. Meanwhile, you see, the Japanese yen continuing to weaken while you're seeing all these interest rate differentials between US and Japan collapsing. Um, and it's really a dynamic that it's really hard to grasp in terms of why there haven't been greater impacts globally, and why why equity markets continue to really hold in there. Generally speaking, I think it ultimately sets a higher floor though for rates globally. Um, because either at this point, rates in the US, I mean, basically, if you look at the 10-year here, I mean, it really hasn't been able to drop below 4%. I mean, it's gotten like down to 385 or something, but 4%, that region within 10 or 15 basis points seems to be, sort of the floor. And if you look at the 30-year, it seems like, the floor is somewhere around that 480 level, at least for right now. And basically, I'm kind of thinking that, rates in Japan go up, push up rates around the world, and basically kind of keeps them elevated and eventually continues to push those spreads wider. Um, and so what that kind of means is, number one, I think, given that you've seen inflation supposedly come down, I have no idea what these inflation numbers are even, if they're even real anymore. Half the values were missing the first time around are made up, and the second time around, they seem to still be like not really clear to me on the auto insurance component, which has the same weighting as gasoline. And so, with rising rates and an inflation rate that's kind of compressed or falling, I mean, you're talking about rising real yields globally. And I don't really think enough people are thinking about what rising real yields could mean. I mean, we know what it meant in 2022, and it wasn't a great outcome for risk assets. And so I think the biggest risk here right now is going into this year is the pressure of potentially rates in Japan continuing to rise, or more importantly, not going down, pushing up rates globally with really falling inflation rates globally. If you look in Europe, I think Germany printed like a 1.8 or something on their year over year number, which may mean that the euro is too strong versus a dollar, because you may not be getting those interest rate hikes that people were kind of thinking about at the end of the year. And so, yeah, I mean, I think it means possibly higher real yields. I think it possibly means a stronger dollar. And that kind of sets up, this whole idea to me that, you could be looking at a scenario where financial conditions globally start tightening again. And I think that's why you're seeing like US markets particularly kind of struggle, because if you look at like Germany, it looks like it's mostly sort of like that defense sector really kind of pushing things. If you look at Asia and Japan and South Korea, it looks like it's mostly the semiconductor AI trade pushing that. And here in the US, we have a little bit of like this mixed bag with this rotation happening underneath the surface. And I I generally, it's hard to be sort of like perpetually bearish on the market. I mean, obviously valuations are where they are, and right now the market doesn't seem to care about them. But again, at some point, if real yields are rising, those valuations will matter, and we probably will see them compress some. That could mean that the market moves sideways this year, and if earnings can kind of move up, they kind of grow into those earnings. Um, but generally speaking, I would think that we're coming into some sort of period of time here where this rise in rates in Japan do start having an impact on things globally.
So, so Michael, let's just draw in a little bit further here on the equities. One of my themes has been you're looking at rotation this year. I've talked about this, and you're seeing that in the start to the new year. Small over large, value over growth. Mag Seven maybe has selectively having a hard time keeping up. But when you look sectorally at the market, either by sector, factor, industry, what looks better to you? What looks less good to you?
So I've been personally, and I've been kind of relaying this to my readers and subscribers and such, that my view is that I think you want to be looking at parts of the market that haven't performed well over the last couple of years. Healthcare, staples, energy, and you want to start thinking about the potential for a rotation out of AI, especially like when you think about the fact that, the market's starting to care more about CapEx spending. And, as these companies like Meta continue and Oracle continue to just spend and spend and spend, and it's eating into their free cash flow. And you're seeing, their free cash flow is all sort of dissipating. You're seeing their CDS and credit spreads starting to widen. And if you're going to be in a rising real yield environment where that's going to maybe mean that these borrowing rates are going to go higher. And I can't imagine that, they're going to be able to continue to spend the way that they do. And so, I'm very worried about the AI CapEx spending, that's kind of helped to lift the entire economy right now. And so, I mean, I don't, I mean, when you look at the energy sector as a whole, it's only like half of the valuation of NVIDIA. So, I mean, at this point, you kind of look at it and say to yourself, well, maybe it's worth a gamble here. Maybe like even if 1% of NVIDIA rotates into energy, there could be a play there.
Right. So I think you mentioned so healthcare selectively. What about energies? How's energy looking to you, Michael?
How's what?
Energy, energy.
Energy. I mean, look, I think I like energy right now. I I look at oil prices. They seem to be the only commodity that's not going higher these days. I mean, for full disclosure, I just bought Occidental Petroleum for myself and for a small number of accounts I manage, just because I think it's a good play on oil prices going up. And, it has obviously, a good shareholder base. And it looks highly leveraged to the price of oil in general. So, I mean, that's my kind of, bet on that group. I mean,
Hey,
when you look at
Michael, can I have some of those potato chips or whatever it is you're crinkling?
their gluten-free mini pizza bagels. My daughter has dance at 12:30, and she's
You-
out
You're
full
you're
on.
pulling a George. I don't do it anymore. I remember when I first started doing this a couple years ago. People say,
Yeah.
"George, it sounds like you're eating when you're talking," so I try not to do
Oh,
it.
yeah.
But
Sorry.
I got to interrupt you for 1 second. I got to tell this story. Some of you have heard this before, but for those of you that haven't, you're gonna love this one. So, I haven't told this story in a long time. So, for all of you that remember, before Spaces, it was Clubhouse. So I discovered Clubhouse, and this is back, I don't know, 21, yeah, 21. And all the Bitcoin crazies were on there. And so, I get on there and I just naively start explaining why I don't like Bitcoin. I was totally wrong. And that's fine. And they're like ridiculing me, and it was unbelievable. I was in Clubhouse. You know what they did? They took my avatar and they all copied my avatar and they made it their avatar. So I'm in this space and I got like 300 people with my picture talking to me. This guy's like crazy. So, at any rate, we're talking, and I shouldn't tell this, but I'm going to. So I had to go to the bathroom. So I go ahead and take a leak. All right. And the next thing, and what happened was I forgot to turn the microphone off. So I'm taking a leak. All
Oh
right.
no.
Full stream, 300 people heard me taking a piss. It was like some kind of Leslie Nielsen movie. And they're all like, wait a second. Because they're like, I don't know, 8 or 10 people on the stage. They're all trying to figure out who it was. And they realized it was me. They go, oh, Noble's taking a piss. Noble's taking a piss. It was unbelievable. So it can be worse than eating in the space, Michael. It can be worse, trust me.
Yeah. It can be, I guess. You gotta remember to use that mute button.
Exactly. All right. So let's just talk about gold and silver. Anything else you want to talk about? Then I want to get to Jack. Any
Yeah, then I'm probably gonna have to run
Yeah,
anyway.
what
So
are you thinking about the gold, silver, the mining stocks, and anything else you want to touch on in terms of, okay, so you made it clear to people you buying energy, so good. Everyone in the room they can do what they want with that. This is again, do your own research. It's what you're doing. What do you do with your guy Saul from the Roslyn Country Club? He just called me the other day. He was thinking of buying silver. What do I tell him?
good luck. I have no idea. I don't think anyone has any idea, honestly. I mean, how does anyone have any idea what's going on in that market and think you have an edge? I mean, the thing is moving around 5% on a daily
Michael,
basis.
Michael, I have to interrupt you. We're not talking about crypto, Bitcoin. We're talking about sorry, silver. Sorry, go ahead,
Exactly.
go on. Yeah.
I mean, honestly, who you can't look at a chart of silver and be like, "Oh, it's going to 200." How do you know that from looking at that chart? It's
Hey,
all over the
if
place.
you're a furu, doesn't matter. There's no accountability. Nobody
I,
cares.
I, I honestly, I couldn't. I mean, I couldn't sit there and consciously write up something about this and say like, oh, make a really big bullish case for it. I mean, yeah, you can draw like a projection for the next 5 or 10% maybe, but I mean, to sit there and consciously try to say like, oh, I think silver's going to 150 because the M2 global money supply is going to be X and the number of ounces in the Bank of at the Shanghai Composite is this, and there's just that much supply is too short. I mean, the thing's moving around 5, 6, 7%
Yeah,
intraday.
but Michael, Twitter bro and crypto bro and silver bro actually, they're actually, I think they may even be one of the few groups I found that are worse than Tesla bro or crypto bro. The silver bro
Right.
are a special breed. Actually, I think what it is, I think the crypto bro, because they're getting bored of the Bitcoin and their crypto.
Yeah.
They've
Well,
moved
they're
into
going down.
no, they're moving to silver now. Okay,
Right.
so
Exactly.
it's sort of like brand, brand management. They changed their identifier, so now they're into silver. Okay, so that all stuff is bollocks, as our British friends will say.
I
That's
mean,
fine. Yeah, all right.
yeah, I mean, my barber told me to buy silver at 20. I should have listened. That's all I know. Now he's telling me it's time to sell.
Yeah,
So.
yeah. Do you, Michael? Does your barber? Does he now have a Substack with a Discord for $99 a month?
No, he's a barber, part time jeweler, has his connections on 47th Street. I guess I don't know, but he
Tell
wasn't
tell
wrong.
tell him it's a Discord account in his future.
I told him he should start a TikTok.
He's evidently qualified. All right. Last thing, Michael. These software stocks, they're deaf. They can't get out of their own way.
Right.
And it's funny. I'm not up on this. You know more about the stuff than I do, but it was hilarious. I'm in one of these chats, and the software stocks were in their own orbit for so many years. They're so overpriced. Blah 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 blah. Again, the gap between price and value. Just because they're overvalued doesn't mean they go down. But and so now they're all like, I don't know, 30% off sale.
Yeah.
But the problem is, I started looking at some of the valuations. They're still crazy. I mean, any talk on the fundamentals evaluation of the
So
charts
actually,
on
I
software?
was looking at like Service Now on Friday,
Yeah,
which has been absolutely destroyed. And I guess the idea there is that AI is just going to destroy all these businesses.
sure.
So I mean, again, when I looked at the valuation of Service Now, it was actually the cheapest it's ever been, like in every single unit I was looking at. Like,
Yeah. But in absolute sense, was it still absurd on cash flow and earnings and book and all that stuff?
yeah, so I was looking at it on a price to earnings,
Yeah,
price to sale,
yeah,
EV to EBITDA, and I was like, price to earnings to growth. And I was just like, wow, this thing is like either the biggest bargain in the history of its existence, when you're comparing it versus
sure.
itself. And I was like, but the chart looks like shit. I'm like, do you step in here and try to catch a falling knife?
Right.
And say like, AI isn't going to destroy this business, or I have no idea. But when you
Michael, but I think the PE and the price to book and price to cash on it is still insanely high, is it not? I just haven't done the work.
I don't for well, so for I don't remember the values off the top of my head, to
Sure.
be quite honest, but I just know that when I was looking at the chart, they were at the lowest levels ever, breaking below even like the previous lows and previous low cycles.
Right.
And so when I start, I like to look at stocks and I look at their valuations relative to where they've been versus themselves as compared to
Sure.
their peers and stuff, because I think that gives you a lot of information. And when I start seeing stocks trading at their lowest valuations ever, it kind of makes me think like, well, either something has fundamentally changed in the business, or these things are just really too cheap. And sometimes that works really well, and sometimes obviously it doesn't.
Michael, breaking. All right, so now I did work, meaning I went to CTF, looked up some numbers. Okay, so I agree with you. You should look at the chart. You should also look at valuation relative to itself. For boys and girls, everyone's tagging along at home. And by the way, if there's a software guy in the audience, please come up on stage because I don't know what I'm talking about. but I just look at this like Ben Graham, please call your office. Market cap 130 billion. Okay, fine. 14 times book. I know no one's going to look at a book for a software. I got that, right? But still 50 times 50, 50, not 15. 50 times EV EBITDA, 10 times sales. They're gonna make a buck 67 a share. I think that's trailing earnings, so it puts on like 70 times earnings. Clearly a value buy here, Michael. No, clearly. So
Well,
so I think this stock, for those of you whose Yiddish is not that good, is verkauft. It's a technical term. All right. The
right.
chart looks terrible. All right.
Yeah.
Okay. And by the way, is it wait la pièce de résistance? Someone sent me something the other day. One of the speakers at our upcoming conference, Michael, for $50 from Double Jeopardy. Would it surprise you if I told you that software is like, I think, the biggest industry concentration for private equity guys? And so, you know, you're gonna have to start they benchmark the valuation off the privately traded stuff, right? And so they made a killing on software for all these years. So I think we got a problem here. I think software, again, don't confuse valuation with price. I think
Right.
the market's telling you something. I mean, I ran into somebody who's in the industry. I don't want to say who it is, but someone who knows Adobe very well. They didn't give me any inside information. And this person told me last summer already that Adobe was screwed. Adobe was screwed.
Yeah.
And I was talking to somebody, a smart guy, the other day, and he's like, "Yeah, Adobe." And then there's this translating software thing, Duolingo. It's another one that's screwed.
Yeah.
And you rattle off another one. I mean, it's just like, and so you know what's going to get you, Michael? Like before these things where trees go to the sky, multiples are expanding. But we've gone from innocent until proven guilty, till guilty until proven innocent. So, yeah, I would say, well, they're going to use the AI to fix it. What's going to happen is the multiples are going to compress. Like if you told me ServiceNow is in 12 times earnings, like maybe I'd listen to you.
Right.
12 times earnings number, which is estimate's too high. I get that, but it's on 70 times a bullshit number they're not going to make, and the multiple, if it's on a 70 PE, should still get cut in half from here. So to me, this thing, like, I got to do some work on this. Thank you for the idea, Michael. This is going to be a great short. And by the way, I was going to say, oh, George, are you shorting it now? No, 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 no. It's not the way this works. People don't understand. You know, wait for the chart to break. Now's the time that you should be looking at these things, not like an idiot like me. The prior years, I was trying to short Tesla on the way up. So thank you for the idea, Michael. It's a great idea.
Well, but you're right. I mean, like I was looking at Adobe years ago, and like because I used to use it all. I don't use it anymore. There's no need for it, right?
Why? Well, why? You just use ChatGPT? It does it for you,
Yeah, well, first of all, you don't need, Adobe PDF anymore because you can open a PDF in your browser.
right?
You don't need Adobe for create images because you can use Canva. You don't need. I mean, there's
Right.
just too much competition. You don't need Adobe stock anymore because ChatGTP can create the image for you. You don't need half of Adobe's products anymore. They've been created 10 times over, and there are cheaper options out there. Like I don't use Adobe, Pro, what is it? Pro, the editing software anymore to do videos. I use Camtasia to do those. I mean,
Right.
so there's just so many options out there, and it's like a race to zero for some of them. So like, why do you need Adobe? So it's the same thing with Microsoft, to be quite honest with you, and I worry about it because I was reading the other day an article in the information talking about how Copilot, Microsoft's investing in Copilot, Microsoft's investing in Anthropic, who's building out Coworker or something like that, and that's competing against Copilot. So they're all competing against themselves, and they're all investing in each other. So it makes you think like, a lot of these companies that are the half of them, it's like a race to zero. It's a zero sum game. There's going to be very few winners in this, I think.
Hey, Michael, as you're ranting, I just want to see King Alpha because Chris does a good job. I'm not looking at his opinion. Just look at the quant rating. And for those of you who don't follow it, the quant stuff on CK Alpha is fantastic. It's pretty mediocre. I mean, the growth is a D.
For
The
what?
momentum, which is just price based, is D plus. Okay, earnings revisions C minus. The only thing which is good is the profit, which is A plus. But when it's A plus, it's only got one way to go, and that's down. So no, this looks terrible. So again, if anybody if anyone in this room knows a lot about software, please come up. Or if you know anybody who's good on software, get them in here or get them for a future space, because this is a do not fly zone. I'm sorry, just not happening. All right, Michael, class dismissed. Thank you as always. It's been awesome.
Thanks, George.
Yeah, enjoy the rest of your weekend. All
You
right,
too.
take care, Michael. Thanks. All right, so with that, we move on. This is great. We're gonna have nobody special. For those of you that don't follow Jack, he does a phenomenal show every morning. I think it's 8 a.m. If you can't watch it, watch the replays on YouTube. He's got a big following on YouTube. Does a great job. No holds barred. Calls them like he sees them. He's a New Jersey Philly guy as well. So if you don't like any of the first part of what I said, at least there's that. And he's his own man. So Jack, good to see you. How you doing?
I'm doing good, George. Thanks for having me on.
Awesome, awesome. So I'm gonna turn the floor over to you, but you and I talked a little before. You were, contrary to what others said, you were the first guy that called out the circular vendor financing thing. I know you've been on this case for 2 years with the AI, and someone stole. What conference call was that? I can't even remember. Was it a micro? What? Remember, it was last fall. And somebody else stole your observation. What you made a big stink out of that. What was that?
Yeah, it was Nvidia's last earnings call. About 15 minutes after they released their earnings, I posted a tweet saying, "Hey, all of Nvidia's earnings growth was just growth in accounts receivable, money that product they haven't been paid for yet. If you take away the expansion in accounts receivable, they were actually negative earnings growth for the quarter. It was just an observation. Maybe they end up getting paid for those things, maybe not. But apparently, some other guy took that post, which got several million views on Twitter. It got a lot of attention. Some other guy wrote this big Substack article claiming that AI algorithms within moments had flagged NVIDIA's accounts receivable as a red flag in accounting. And he wrote this big Substack post about how NVIDIA had caught, or how NVIDIA's AI product had basically caught NVIDIA fudging their earnings. And well, that kind of chapped my ass. That rubbed me the wrong way. No, it wasn't AI that flagged it. It was me, and I had the timestamps to back it up. So, yeah, that was just me complaining. But
That's all right. That's what we do. So in any event, you can talk about whatever you want, but I thought it might be interesting, and given your background, you might want to just talk a little bit about, professionally what you did in another life. So you're not unlike a lot of these bloviating talking heads. You actually know something about electricity and whatever. But um, the circle jerk on the vendor financing, people kind of know that right now. But the story keeps moving, and in recent weeks, a few weeks ago, you had the Blue Owl thing canceling that Michigan plant, and I don't know what's going on with the CDS for Oracle lately, but a lot of moving pieces here. And as my former boss Peter Lynch always used to say, can you upgrade the story, downgrade the story? So it might be useful to talk about what's new in the last couple of weeks, like making you feel less bearish, more bearish, and also related to that, the emerging problem around power. And you were telling me the other day how, in your hood, there are people on signs in their lawn saying, just say no to electricity, this data center or whatever. So talk a little bit about what's new on the AI trade, and then also what's going on as far as power generation. And maybe you might want to credentialize yourself just a little bit before you start talking about. I believe you worked for one of the big electric utilities some years back. So have at it, Jack. The floor is yours.
sure, I call myself nobody special. That's on purpose because I don't have a financial background. My background is engineering. I spent 15 years working in commercial nuclear power. So I am somewhat uniquely qualified to talk about the subject of power and nuclear in particular. But generally speaking, as far as my finance content, I just, if we're putting it bluntly, I have an eye for detail and a nose for bullshit and a big mouth. And so YouTube was a natural fit for me. And I was one of the first. I don't know if I was the first. I was among the first handful of people who called out the circular financing way before it was cool. And of course, the financial press, when those posts started to go viral, the financial press was very quick to say this is just a conspiracy theory. Don't listen to these Twitter randos. Ignore it. Now here we are, 2.5 years later, and the problem is so big that there's basically no out here. We are trapped in this trade as a society at this point. They've burned so much capital, and I don't think there's any fixing it here. Now, recent developments in the financials around AI. I saw an interesting article in Financial Times just published this morning. As a matter of fact, private credit investors pull $7 billion from Wall Street's biggest funds. And I had seen something similar in Bloomberg earlier this week talking about a run on these private credit funds. The redemptions are through the roof. In particular, one that caught my attention was the Blue Owl Capital Technology Fund, their technology focused investment fund. They have had 17% redemption requests at the end of 2025. I mean, bag holders wanted is putting it mildly with this fund. And this is the fund that specializes in AI and AI
Whoa, whoa,
infrastructure.
whoa, whoa, whoa! 17%.
Correct.
And
They had the
would this be the fund or a fund like this, the one that was doing like the power thing that got canceled in Michigan, like this type of fund?
I don't know if this fund was directly tied to the Michigan data center,
Yeah.
but it's in that sector, so
All
it's
right.
highly likely.
But okay, but boys and girls, listen to what Jack said. 17%. All right, keep going, Jack.
So, I mean, typically they cap redemptions somewhere around 5%, right? So 17% redemptions. Now, here's the amazing thing about this is they lifted their redemption cap to over 19%. And the following paragraph that talks about this says the fund has ample liquidity, that they had no problem meeting 17% redemptions. And if that doesn't scare the shit out of you, you're not paying attention. Because where are they getting the liquidity to redeem 17% of their investors? It's coming from somewhere, and it's coming from somebody who has no idea what they're buying. And I'm telling you, this is guaranteed to be either pension or mutual fund 401k money that is being used as exit liquidity for the original investors in this private credit fund. And so, right now, people are being handed bags and they don't even know it. I've been pounding the table on this phenomenon for months on my channel, but that article in Financial Times this morning just blew me away. The scope of it: 17% redemptions. Now that's an extreme example, but Ares is seeing it, Apollo is seeing it, everybody is seeing redemption requests 5% and higher. So the original investors, they are getting out of Dodge, handing the bag off to retail and traders. That's the latest development in the financial side of it. Now, my nuclear background comes into play here because there's one thing in particular. Now the numbers have just gotten so big in the AI space, and I've been saying it for years. Sooner or later, the law of large numbers is going to catch up. You just can't have compound growth like this quarter after quarter, and project this over several years. Eventually it's more money than all the world, and well, it turns out we used all the power and all the memory too. And over the last few days, I've seen all these articles about the memory shortage and how, oh, this is going to be bad for PC gamers. They can't get any memory. It's going to get more expensive. This is going to be so bad for Apple. Apple won't be able to afford memory for smartphones. Overlooking the fact that, yeah, memory getting expensive is also going to affect the people who are making it so expensive. The AI trade, the hyperscalers, they're also going to have to pay this higher price. Everybody's focusing on these other sectors, acting like, hey, these unprofitable data centers that are already unprofitable are getting even less profitable. And the same thing happens with power. And we are now seeing major pushback nationwide against data centers because of power and because of what it's doing to people's cost of living. And once again, the effect is all, hey, here's the effect on people. It's making power costs for poor people higher. Other industries are in trouble. Well, yeah. Well, what about the AI industry? What about the data center operators, where 60 to 70% of their operating costs is their electricity bills? So, we had something like 10% growth on average nationwide in electricity costs last year. It's even more so in Northern Virginia, where most of these data centers are, and Texas, where a lot of them are being built. So these unprofitable data centers are getting even more unprofitable as these power costs rise. And a lot of promises are being made to explain this away, because AI is above all a story, this bubble. It's all a story about what could be, what might be. It's never about what it is, because every time AI embarrasses itself, we say, "Oh, it's all right. The technology is getting better. We're learning from it." It's getting better at making images and videos, which is flooding the market with fake information, and that has all kinds of societal implications as well. But it's not getting smarter. I mean, I think we learned that with ChatGPT 5. It is definitely not getting smarter. And so the promises are being made about power here. Now, I can tell you one thing about nukes is we are notoriously careful. We don't take chances. We don't like risk. That's for obvious reasons. There's unique properties in nuclear power, radioactive byproducts, large amounts of energy stored in a nuclear reactor. Imagine how big your gas tank would be if you filled up your tank and then drove 24/7, pedal to the metal for 2 years. And at the end of 2 years, you've only burned through a third of a tank of gas. That's how much energy is stored inside a nuclear reactor. And of course, our fuel continues to generate heat after we shut down, which, when you turn off a car, your engine's still hot, but it starts to cool off. Ours, when you shut down a nuclear reactor, it keeps getting hotter. It keeps generating more heat. So you need to maintain constant active cooling in these nuclear reactors even after they're shut down. So that's why nukes are so careful. That's why people we call them dirt burners, coal, gas plants, they don't want to hire nuclear engineers because they're too careful. The analysis paralysis means you can't get anything done. So, I guess the point I'm trying to make is unless you've actually worked in the nuclear industry, you really don't have any experience or anything to draw upon to understand just how smothering the red tape, the compliance costs, and the layers upon layers of protection are. And the last time we tried to build a nuclear power plant in this country, it caused one of the biggest bankruptcies in history, bankrupted Mitsubishi. We built 2 nuclear reactors in Georgia at the Vogtle plant. These were AP 1000 reactors. They were much similar to the larger reactors that are currently in operation. We built 2 of them. The original promise was they were going to cost $5 billion a piece and take 5 years to build. They ended up costing $15 billion a piece and they took 15 years to build. There was 2 similar reactors in South Carolina at the VC Summer plant. They got about 40% complete. They spent $9 billion getting these reactors 40% complete, and then they abandoned the project. And every ratepayer in South Carolina currently has a charge on their electric bill for that failed project to make up for the debt that they took out to build those plants and failed. So we have forgotten how to build things in this country. That's no secret. Right? Look at manufacturing, look at shipbuilding, look at natural resource gathering. It's all more expensive here than it is anywhere else in the world because we are a nation of middle managers. For every yellow hard hat, there's 5 white hard hats telling them that you're doing it wrong. That is far more amplified in the nuclear industry than any other industry because of that regulatory overwatch that is applied. And so when I see people like Sam Altman, who is notorious for A, lying, and B, taking risk, like firing all of his safety people because they told him not to do something and he didn't like it. And so instead he fired the safety people. A man like that should never be allowed anywhere near the keys to a nuclear reactor. And I'm not an anti-nuclear activist. I'm very pro-nuclear. I believe in the technology. I've lived near nuclear reactors. I worked on one. Sam Altman should never be allowed to control a nuclear reactor or get anywhere near it. His mindset, his mentality is 100% incompatible with nuclear energy. And so when I see Sam Altman saying, oh, it's okay, all this power that my stupid chatbot is consuming because we're going to build nuclear reactors right next to these data centers to power them. All right, these data centers are built right now. These data centers are operating right now. The last nuclear reactors we built took 15 years and $15 billion. These nuclear plants will not arrive in time to save the current generation of data centers. And there's all kinds of promises are being made about small modular reactors now. And I'm very hopeful about SMR technology. I think it is the way to go. Smaller, compact, um, at risk of sounding cliche, cookie cutter reactors, where you make a lot of smaller reactors that are all identical instead of big giant reactors that are all different scattered across the country. That is a technology that has a lot of promise. I hope we develop it. I think we will develop it. We've got experience at our national labs. We've got experience in the nuclear Navy operating similar reactors successfully and safely. They will not be here in time to save this bubble. There is no chance. And the promises that these companies are making, like we're going to have functioning nuclear reactors, we're going to start construction of power sold onto the grid by 2027. You're talking about a reactor technology that there is not even a regulatory framework in existence for any of these reactor types. The NRC, which is one of the most overbearing regulators in the world, has not even told the industry, here is how you have to do it. So how are you going to design, build, and operate a reactor where the regulator hasn't even told you what they expect yet? And this is all supposed to happen in the next year or two. No chance. It just isn't going to happen, George.
So if there was so there are a number of stocks in the nuclear ETFs. I don't know if we want to get any names or not, but you and I spoke the other day on the phone about OKLO, I think, and I'm not sure what the numbers are now. It's like a $15 billion valuation, massive insider selling, no revenues. Uh, the guy's professor, the husband and wife run the thing. The guy's professor at MIT said he was the dumbest guy in the class. He's a shyster, yada 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 yada. Yet the Furus on X, the number go up crowd, they're like, oh, if we got Fibonacci, it's bottoming out. It's this, it's that. Last I checked, I think Joe Fibonacci was a backup shortstop on the Reading Phillies, but whatever. Stuff like that to me, I'm just amazed. Again, we talked earlier about value and price. Like, I mean, and this is not the only one. This may be one of the more egregious examples, but um, so a question useful for the audience. So it's all well and good because I know you're positive on the outlook for uranium nuclear longer term, but there's the company and there's the stock. So not just OKLO, but generally speaking, if you want to comment on OKLO, it's great. Do the stocks offer any opportunity, or are they just a huge disconnect, valuation disconnect, whereby wherever the fundamental merits of nuclear and uranium might be, or regardless of how the uranium price is going to go, the publicly traded vehicles right now are just like ridiculous.
Uh, OKLO, like AI, is a story. All right. And if you believe that story and you want to buy the stock, just understand you're not buying nuclear reactors. You're buying a story about nuclear reactors that may one day be. And OKLO is one of the most valuable pre-revenue companies in history. I don't think it's the most, but it's up there. And they have no revenue. They have no profits. They don't even have a product yet. Now, the model reactor that OKLO is supposedly building, it's very different from the light water reactors that burn low enriched uranium that are currently in operation right now. What OKLO is trying to build is a sodium cooled fast reactor. They call it the Aurora, and it runs on high assay, low enriched uranium, which, number one, there are no sodium cooled fast reactors operating anywhere in the United States, at least not commercially. There may be experimental little tiny test reactors at national labs somewhere, but there has never been a commercially operating sodium cooled fast reactor in the United States. So if you're buying this company, you are betting that something that has never happened is going to happen. It could, but it's never happened. The guys that are running this say, oh, don't worry, this is essentially the same as this EBR2 type reactor that used to run at Idaho National Labs back in the 90s. The Clinton administration canceled the research on this. There was a test reactor that used a similar technology, but I can tell you the phrase essentially the same. When I hear these OKLO executives say something like that, they are betraying that they do not have a lick of operational utility experience among them, because nobody in the nuclear industry would ever dare stand up and say something is essentially the same. That is a huge red flag and an error precursor. One of my jobs was doing what's called item equivalency evaluations. If we wanted to replace a bolt with a similar bolt made by a different manufacturer, slightly different material, whatever, we're just swapping out a simple bolt. You're talking somewhere between 15 and 20 pages of evaluations of this bolt to prove that it is exactly the same. And here's the testing we did to say it's exactly the same. And here's the specs that it was built to. And here's the differences of its behaviors under certain temperatures and pressure. Something like 10 to 15 man hours worth of engineering work. another few hours of a second engineer who has to review my work, and then another few hours of a third engineer who approves the work that the first two engineers. So you're talking about 20 man hours of labor to change out a bolt at about $200 an hour, give or take, for nuclear engineers' labor costs. Who knows what it is now? And you're talking about $4,000 of white collar labor to replace a bolt. And these guys are saying, "Don't worry, our reactor is essentially the same as this other reactor that was canceled in the '90s." He is speaking a different language here. This guy has no idea how the commercial nuclear industry operates. And this is why OKLO, when they asked for permission to build this reactor last decade, were told no by the NRC. And then they submitted their revised application and they were told no again. And the company was on the brink of bankruptcy when Y Combinator bought a stake of them. They got into bed with Sam Altman, and that's when they took the company public and all this other stuff. I mean, this company was on death's door before Sam Altman got involved. So again, I have very little confidence that these reactors are going to get built. Certainly not in the time frame that they're projecting. There are other technologies like NuScale and TerraPower. There's competitors to OKLO that are further along. There was only one had been approved by the NRC. They started building it and they canceled the project due to cost overruns. So there are currently no planned commercial small modular reactors with approval anywhere in the United States. There are experimental reactors that are trying to be built for demonstration purposes at military bases, because at military bases you have different regulators overseeing them. It's not the NRC. These aren't commercial reactors. So they're trying to skirt around the Nuclear Regulatory Commission, which has already told them no several times. All I would say is be careful of people who use language like, "Don't worry, this is essentially the same and we can do this in 2 years." The nuclear industry just does not operate this way, and for good reason.
Wow. Wow. All right. So sell's not a four-letter word when I'm looking at the nuclear stocks. I get that. Coming back to AI. So you talked about the fundamentals and you said it's a story. I get that. But as far as the stock, again, the company's not the company's not the same as the stock. The stock's the same as the company. Certainly know that with Tesla. Tesla's a story. But when you look at the AI related stocks, Nvidia, the Neoclouds. We got to talk about the Neoclouds, those things. Okay, yeah, stop. Hold on. I'm interrupting myself. Jack, talk dirty to me about Neoclouds.
All right. Neoclouds are just WeWork with GPUs. All right. And
Whoa, 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 whoa! Wait, say that again. Did you copyright that? Who writes your copy?
I didn't write.
Neocloud.
I'm
Neo.
pretty sure Ed Zitron said it first. I'm pretty sure that was Ed Zitron's line.
We
Sorry.
work. We work with. What did you say was? We work with what?
We work with GPUs. That's what the Neoclouds are. Right.
Wow.
We work. They would either buy or rent long-term commercial real estate, and then they would rent it out by the hour.
Right.
Right. So it was the arbitrage between the cost to own and the cost of a short-term hourly rental.
Right.
What does a Neocloud do? They buy GPUs and then they rent them out by the hour. And this, in my opinion, is not a business model that is going to scale. And it's already proven that it's not profitable. None of the Neoclouds make a profit. They're all losing money. The losses are getting bigger with time, not smaller. The only reason these companies exist to begin with is that they're basically special purpose vehicles that have been created by the hardware manufacturers, NVIDIA chief among them, in order to inflate their own sales. And NVIDIA has even had to backstop their sales to many of these. CoreWeave is one of them, and there's a third one. I can't remember the name off the top of my head. It wasn't Nebius, it was another one. Lambda, I think, was the.
Right.
But they've basically had to guarantee to CoreWeave that they will rent back any unused GPUs. And all right, so I buy a stake in this company, I give them money, they buy my product with my own money, and then I have to backstop that sale by guaranteeing to rent my own product back that they bought with my money if they can't find another renter for it. And then the CEO goes on Jim Kramer and talks about how, hey, all this talk about our depreciation expense is BS because our customers have promised to rent our product for 6 years. And then Jim Kramer doesn't call him out and say, the customer you're talking about is the guy who sold you the chip in the first place.
Jack, as I say, you can't make this stuff up. That's crazy, man. That's crazy.
So yeah, and now look, George, what all the things we just talked about with power costs and memory costs, you've got a Neocloud business model that's already a cash burning inferno. What happens when the power cost goes up? What happens when the memory cost goes up? And that's besides the fact that if you believe guys like Michael Burry, what happens when the curtain is pulled back on their depreciation expense? That, in my opinion, they're all lying about. So I don't, the Neocloud businesses, I think, are doomed to fail. I think they're going to end up defaulting on their debt, and they're probably going to be bought for pennies on the dollar by whoever survives in the space. I would not be surprised at some point to see something like NVIDIA buying CoreWeave just to avoid the headline risk of that company going bankrupt. So that's one reason why I won't short CoreWeave, by the way, even though I think the business model is doomed. I would not be surprised to see that happen.
Well, that NVIDIA buys it back.
Yeah.
Yeah, it'd be chump change for them. I mean, the market cap's very small compared to NVIDIA's market cap, so it's not a big
Right.
deal. I mean, that makes sense. That makes
I
sense.
guess I should disclose, by the way, that I am short NVIDIA. I
All
don't
right.
know the whole like regulatory thing, but yeah,
Yeah.
personally,
Yeah, that's very good of you. What about Oracle?
in my opinion, Oracle and that silly earnings call, I believe it was at the end of September. I think that was peak AI bubble, to be honest with you. Um, Larry Ellison, first of all, I just cannot trust anyone who has had so many facelifts. I look at Larry Ellison like Stone River, right? I from your age. Sorry, that's not somebody that I would really trust. Um, he comes in and Oracle stock explodes 30% on their earnings back in September because he reports some obscenely high number of remaining performance obligations, RPOs. And all he did was he took all of these contracts from companies who do not have the money to pay them. He totaled up the sum value of all those contracts, and then he reported it as one lump sum as if this is all the money we're about to make. And Oracle stock rips on that news. And then they say, we're going to buy $1 trillion worth of chips with it. Again, with money Oracle doesn't even have. And of course, Oracle stock since then has done nothing but go down. And another story that just broke was Oracle's bondholders are now threatening class action suit because Oracle lied about how much debt they were going to have to raise.
Small little detail. Oh
Yeah,
my God.
well,
Say
I don't know
that.
if
Say
they lied.
Jack, say that again, just so people catch on to that. Say that again.
Yeah, I don't know that they lied, but they were not forthcoming. It was a lie of omission about how much debt they were going to have to issue to pay for all of this stuff they're promising to build.
Right.
And so, that story just broke on Friday that Oracle's bondholders are threatening lawsuits. So Oracle, late arrival to the game, um, a survivor of the dot-com bubble, just barely. All kinds of analogies you could draw with that. But in my opinion, Oracle reporting their remaining performance obligations, that was when the circular accounting went from Jack's conspiracy theory to, oh my God, these guys are so over the top brazen about this bullshit. And shortly after that is when that Wall Street Journal image with all the circles and the arrows pointing to each other started circulating. That was when the circular accounting became undeniable. It was so over the top that even the mainstream press couldn't pretend anymore.
Oh boy. All right. So just take a deep breath. So I want to go to Dave Nikoski and then Ryan and then Thomas. Dave, good to see you.
Hey, great being here. You need to change nobody special. You need to change your name to somebody special. I am in the same camp as you. I came out in our daily finance show on that Oracle news and it said I'm shorting them. It was at 340 to give you an idea. I agree with you 100% on the nuclear. I caught all of them very, at the very bottom. SMR at $2. Wrote it up, sold it too early, but made good money on it. I agree with your assessment there. I've been delving into the solar and the battery related stocks, EOS, Fluence, TE Energy. I think they're going to have redundancy. I think the natural gas turbines are going to be the route that they have to go. So I assume you're in somewhat sync with that thought process, but it's not going to be enough, right? It just you can't generate that much power. Off peak hour prices for electricity are not going to be off peak anymore. They're going to be on peak and match with, the day rates of when industry is open, because I think everyone's going to clamor for that. So, great overview. Nobody special. I do follow you. I think that was a great, lead into what's happening at the data center world. There's interesting data that came out on Meta. They were planning to build the Louisiana data center. They were estimating costs at 10 billion. It's now at 28 billion as of 2 months ago. So I don't know how you get an ROI on something going from 10 billion to 28 billion, and it's probably going to be higher. Right now, I think a lot of these companies have thrown so much money at this, they can't let it die. This is like the Meta's virtual reality metaverse that they created, where they just kept throwing money at it, and it brought the stack down to, I think it was $80 in the fall of 22. And they finally pulled the money from that, and the world recognized that, hey, they are just going to go into a capital spending abyss. One of my friends actually coined this whole term of capital spend escalation with the AI. And anytime a company comes out and says they're going to spend more, the market gravitates to them, and at some point that capital spend gravitational pull is going to be like, what? There's no ROI. You have to pay that much more for energy just to keep this open, and that's going to push ROI way out into the future. Yeah, I do think AI is a big deal, but just like the internet, we lit the last black fiber actually in the fall of 2008, as we were going through the GFC, and that's what prevented much of tech started breaking out in March of 2009. Most of your semi stocks started hitting 26-week relative strength highs. As you know, I'm a technician, and we went bullish on the market 3 days before the actual bottom in March of 2009. So I see a lot of similarities, and the love and affection and how everyone wants to gravitate to these. I think right now, looking forward, I think that we're moving into hard assets over financial assets. Banks are doing actually quite well globally, and that's something that stands out to me. That this is more of a rotation. If you looked at XLE versus XLK, you're multi-month relative strength highs. So the tech is certainly waning in terms of fund flows. But I'll leave it at that. Great space, George, as usual. I did listen to your interview with Jay earlier today. I thought it was one of the best ones you've done.
Thank you.
I'm in agreement with that. I called the emerging market, just before last year. In December, every emerging market made a bottom. I think it was December 24th across the board. And I'm sticking with that thesis at this point in time. I'll turn it back to you. Thanks, George, for having me on.
Yeah, appreciate your comments, Dave, and you and I will be. For those of you, Dave's known to most folks on X, but Dave and I are going to do a YouTube, a podcast week after next with charts and everything. So he'll be able to show all this stuff. David, you got to get that. You got to get your thing. You got to get that fixed so we can do the share screen, or send me the deck and I'll put the deck up. At any rate, no, nobody special is somebody special. Totally lighting it up. And by the way, uh, Dave Nikoski and Jack and Ryan, any of you want to respond to this? I just got a chuckle. So we all have a friend, your barber or the guy from the country club or Wrong Way Louie, whatever you want to call him. We all know that guy, okay? And I have what I call also the dopometer. I made that up, the dopometer. Okay, it's sort of like my sentiment indicator for what goes on X. And Jack, I'm going to pick on you because you have your ear to the ground on this. Jesus Christ, someone should do a word count thing. And Ryan, you're good with the computer, so maybe you could do this. Someone should do a search for like, picks for 2026. And the Neoclouds, it's like, NBA. No, 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 it's Iron. No, 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 it's Cypher. It's this, it's that. And by the way, if I have to check my work to solve for X, is there any doubt in my mind that these guys are completely wrong? Slam dunk, basket swaying, game delaying. You got freaking Eric Jackson. Eric Jackson, the biggest degen, irresponsible, shyster, financial malpractice. He won't come in this space. He's scared of me pumping these things. So, Jack, I mean, I want to go to you. I look at these NeoCloud things, and it's like, yeah, they're spending all this money, great, but all this crap. I mean, you're not going to be able to figure out whether it's. I mean, you do the numbers, and it doesn't make any sense, but there's kind of innocent until proven guilty because the momentum is intoxicating. But I look at all these things, and okay, people believe in fairy tales, and who knows, it could double again. I have no idea, but fundamentally, it's complete garbage. I mean, did I trigger you, Jack? How would you respond to that?
Yeah, it's garbage. I mean, look, there's a garbage, and these guys are garbage men. And that's my whole point. My whole point when Oracle, or not Oracle, when CoreWeave first came out. Because I had never, like everybody else, I never heard of CoreWeave in September of 2023. Nobody had. The company didn't even exist. They were a freaking Ethereum miner a few years earlier. And before that, they were a failed hedge fund. And I started looking at these guys. Now, who the hell are these guys? I find out in 2021, they ran a pump and dump, a company called Sycerex. They found some publicly traded Ethereum miner to bag hold all of their Ethereum mining rigs that they wanted to sell out of. And so, of course, they do this reverse triangular merger with a company called Sycerex. They get millions of shares of Sycerex stock in exchange for their GPUs. Sycerex stock explodes higher, and they dump it all. And of course, Sycerex goes to zero. The company's now defunct. The guys behind CoreWeave made millions on that deal. That was right before they got into data center business. And look at what CoreWeave's executives are doing right now, selling stock day in and day out. Every day since the lockup expired in August, these guys are dumping shares every single day. Magnetar Capital, the company that bankrolled them, the biggest sleazeballs that were making deliberately sabotaged CDOs during the GFC, selling them to unsuspecting investors while simultaneously betting on their failure by buying credit default swaps against them. Magnetar's CDOs had a 90% failure rate when the industry average was 65. Remember that scene in The Big Short with the Asian guy at the sushi restaurant
Sure.
and Steve Carell can't believe what a
Yep.
dirtbag?
Yep.
That was Wing Chow. He was the one who was assembling the CDOs, and Magnetar Capital was hand picking the mortgage bonds that were most likely to fail, having Wing Chow put them in the CDOs while they bet against them. They deliberately created sabotaged investments and sold them to unsuspecting investors while betting against them. That's the people bankrolling CoreWeave.
I
And
feel
go all the way back to the early 2000s. What did the CoreWeave executives do for a living? They worked at a company called NatSource that's now defunct. It was a carbon credit trading firm, and they were trading carbon credits through a network of 20 to 60 shell companies in the Cayman Islands. And the only reason we know about that is because of the Paradise Papers. Somebody want to explain to me what the hell you need a network of 20 to 60 shell companies in the Cayman Islands for, other than tax evasion or money laundering? I don't know what the hell these guys are up to, but they're financial degenerates of the highest order. And now they're single-handedly inflating this bubble that everybody, whether they realize it or not, is invested in. And I've been pounding the table. Somebody needs to look into these guys, who they are and what they're doing for years. And well, now it's too late.
and there's a whole little, mini group here, industry. It's like I can't keep track of all these things, Hut and Cipher and Iron. I mean, it's all birds of a feather, no, Jack?
Yeah, I mean, ultimately, it's the same thing. It's the arbitrage between the cost of building a data center and the cost of renting it out by the hour. And they're losing money. They all lose money. None of them are profitable, not even close. And the losses are getting bigger, not smaller, as they tell us we're getting better and better at it. And the only reason it works is because retail investors have been willing to open up their wallets and continuously give these guys more and more cash to set on fire while they all sell their own stock.
Jack, let me ask you this. So, as Soros always used to say, the way to make money is figure out what does the market believe that's not true. What is the lie that the market believes? but then more importantly, try to pinpoint when are they going to realize they've been had. So right now we're in this environment of innocent until proven guilty, and I guess is it going to be there? They're just going to eventually be too much pay. They're going to have to. They're just going to keep printing more paper and insiders selling more. That eventually the whole thing's going to collapse under its own weight. Or is there some catalyst you can point to that's going to make this thing go tits up? Like let them live the lie for right now. But when do you think it's going to become painfully obvious to everyone that it just ain't so?
There's only a few places in the world where they can get enough money to keep this thing going. I mean, right now, big tech capex is not enough because it's not just that they need to keep burning the money; they need to increasing the rate at which they're burning money. Growth stops, this thing is done. And I'm not talking about
Hey,
shrinking. I'm talking about just not growing anymore.
yeah.
This thing goes hell in a handbasket. So where can you get the money? Private credit. Private credit is already starting to balk at it. See also that Blue Owl story in Michigan. I don't know if that's a trend yet or not, but I don't think private credit, maybe it can buy them time, but even then, I don't think that there's enough money. You've also got sovereign wealth funds, which you've all seen these guys, right? Shortly after that story about OpenAI wanting the government to backstop their debt, and then real quick, they're like, oh no, the crisis manager we hired told us to tell you that's not what we just said. Uh, Now they're all on planes over to Dubai trying to get the oil sheiks to build data centers paid for with their sovereign wealth funds, the Saudis, the Emiratis. So uh, that's another place they could potentially get the money. And the other one is just direct subsidies from Uncle Sam, right? Like the taxpayers just have government data centers. I don't think that's going to happen in an election year where affordability is front and center in everybody's mind. I mean, we've had Bernie Sanders and Ron DeSantis both come out in opposition of new data centers being built recently. When those two guys agree on something, there doesn't leave a lot of wiggle room in between for where does the average person lie.
Hey,
So,
Jack, can you just give us like 30 seconds on why you're the president of the local chapter of the Sam Altman fan club? Just, I mean, I know we don't have all day, and maybe it'll just go on for hours, but give us like a few of the greatest hits of like why should the average person be wary of anything Sam Altman says or does?
Sam Altman's first company, Looped, I think it was called LOOPT, was a lie. Founded by Sam Altman in 2005. They lied about their active users. They said they had so many million active users for this social platform. It was only a few thousand. Everybody who gave him money lost everything. And somehow that made him famous in a good way. I don't know. He was fired by his own board of directors at his charity, OpenAI, for basically lying. I mean, they flat out said we fired him because he is a liar. And now stories told by this guy, this liar, documented liar, are now being used as gospel. Like, for crying out loud, they're talking about building data centers in space. Um, okay. And I think in the same interview, he talked about building a Dyson sphere. And that's great. I like science fiction too.
Sorry. I'm going to reflect my ignorance, but this is going to reflect my ignorance. But I suspect I'm not the only one who doesn't know this. When you say Dyson sphere, what the hell is that? Is that like vacuum cleaners in space? What is a Dyson sphere? I'm sorry.
No, a Dyson sphere is not a vacuum cleaner.
What is that?
A Dyson sphere is a hypothetical megastructure, basically a shell that you build around the sun that captures 100% of the sun's output.
Oh, sounds like
Yeah,
something that Elon Musk would come up with. A Dyson
might be.
sphere.
Hey, I mean, look, maybe I just don't have the vision. Maybe I'm just a Luddite. But I think that's probably not going to get here in time to save these data centers that are going to be obsolete in 6 years. I'm going to go out on a limb.
All right,
All right.
all right. So Jack, stay there. You become. I think that you have a future in Twitter Spaces. Like you do your thing. You're my new best friend. We're doing a recording. This will be great. So just stay there, Jack. So I want to go, and I know Eric, you want to talk, and Kane, you want to talk, and Thomas and Ryan. But we're gonna do this in an order. Ryan, are you there, Ryan?
Yeah. How you
Hey,
doing,
hey,
Brian?
Ryan, good to see you, man. So first thing, Ryan, we got some business to do here. So I'm gonna get the recording. We need because I can't keep. I'm starting to write these things down. I can't keep up with Jack. Can you do like once we get the recording, we need to do like a greatest hits, and we need to tweet out all his one liners. Like he has just been on fire.
See what we can pull out.
Yeah, all right. So Ryan, anything you want to weigh in on? Because after Ryan, we're gonna go to Thomas and then Kane and then Eric. So Ryan, what's on your mind?
Yeah, I jotted a quick rundown for you. So, I think heading in this year and looking back at a couple of different things, it's pretty obvious.
Yeah, Ryan,
George.
could you just get a little closer to the microphone? We're having a hard time hearing you. Go ahead.
Yeah. All right. Sorry. So, George, you and I have talked over the years, right? And you've always heard everybody say that there's nothing new under the sun. And we've all seen these things before. I would argue that you could make a case if anything was different. The response to COVID, where we had, the world's most globally interconnected economy throughout history, shut down and restart at various times, printed something like 60% of the money supply that's ever graced the face of the earth within a calendar year, and then set interest rates to zero or negative around the globe. And it still has a distorting effect on what's going on. We're still working our way through that. We've seen things change, like stock bond correlations, stock gold ratios, yield curves, not give us the same signals they used to in the past. And with markets at all-time high, the AI bubble fears, people are thinking about looking at things like, well, what is gold telling us? If you go back through history, I would make an academic argument that I don't know that gold really was the inflation hedge outside of the 70s that people expected it to be, so much as it's a play on, what people see as stability. And, we've continued to see that it's a lot of central bank buying that has been driving some of this. But what's been interesting is, if these cycles were to repeat, what you would typically see is the precious metal explosion that we've seen is going to be followed by the industrial metal plays, which I think some of the guests on here, I know David was an early person with that last year when we've had some of these spaces. I know I mentioned it. If you go back and look at one of my tweets from last year of January, it said this is the year of commodities. And then typically what follows that cycle, George, to some comments you've made, is that, energy kind of follows that next. So I think for this year, I'm kind of looking at stuff that you might consider is kind of in the debasement trade. They've made it pretty clear that the global governments seem to run it hot. It seems like the White House has messaged several times they want rates lower. They want to, we're looking at the distortion in the money supplies, budgets, et cetera, again. So, when you're looking at, say, metals over miners, I like miners. I think we're about 6 times the amount of metals that we need to come out of the earth short. You're probably going to want to look at active management if you're looking at funds. Certainly, whether it's your own picks or whatever, broadening out into quality. But I really like stuff that has hard asset plays, infrastructure plays, defense plays, foreign stocks. I'm kind of one of those folks that I think rates are going to continue to get stuck in this range that we've been in for the last 3 years, and that could bode well for a couple of different asset classes like Euro banks. I think one of the big things is that when you think about like asset rotation and where to go and when to get into or out of things, there's always the unknown unknowns, the true black swans that by definition, nobody can see coming, or else you couldn't call it a black swan. And kind of outside of that, you're looking at some of these things, mentioning earlier with Kramer about, Japan and where their rates have gone and why that kind of stuff hasn't blown up. I think of it like a car. If you're driving over a hill with a blind spot and you come over that hill and there's a brick wall on the other side, if you're coming up over slow enough, you've got time to hit the brakes. If you're coming over it at 90 miles an hour, well, there's consequences to that. So I don't know that you could say per se that it was the brick wall that did the damage so much as the speed did the damage. And it's all going to be about, kind of what the rates of change are for some of this stuff. If we see these really rapid expansions in, say, credit spreads, that's going to cause a problem. If it's a slow expansion, then the market's got time to adjust. So I think monitoring rates of change of some of these things are going to be more important. So I just rattled off a lot, George, but that's top of mind.
Appreciate it, Ryan. And we'll come back on that. I just want to let others get a word in here edgewise. So just stay there, don't go away. Let's see, in order here, we're going to do Thomas, and then we're doing Kane, and then we're doing Eric. Hey, Thomas, good to see you. What's up?
Hey, thanks, guys. So, also, I was just going to do a shout out to basically Special and George yourself. Guys do a great job. You know what? Okay, I'm not a naysayer, so let's take this with a grain of salt. I'm actually a software engineer guy, right? So the one thing to think about nuclear energy, it's cheap to run, but it's super expensive to decom, and it's a sitting threat in war, and it's a sitting threat for solar flare, which I just want to say. So the cost can be enormous if you have a problem. Like think of Fukushima or Chernobyl. There's a great HBO video you can watch. And when we decom it, what's incredible is that it's super expensive for the thing that if you take a look at it, George, you're good at working numbers, but 3 Mile Island is in the news, right? It was sort of had an accident in the United States and it was shut down. It's sort of like mothballed. They're going to turn it back on, but when you decommission one, what you do is you have to dismantle it. So picture people wearing like hazmat suits and using caterpillars and decomming the entire thing, put it on a train, take it somewhere, and pay to have it buried. So people will go to Congress to say that, well, it's like a couple $100 million. That's it. Do you really think that a couple $100 million you could decom a gigantic plant like that and throw away everything that's contaminated? I mean, the cost is sort of enormous. Now, what I was also going to say is that just to throw something out there, the thing is that I'm not a naysayer with nuclear. It's just we need to be careful because if you do a Google search and say solar flares that hit the Earth, so the last one was in the 1800s, and then there's stories. Now, I saw this on basically watching a video where a bunch of scientists was just putting out an alert saying they're sort of anti-nuclear, but they're saying that what we don't realize is that every 100 years or so there seems to be a gigantic flare. Last time it happened, it energized the telegraph lines, which was the only like electrical thing we had at the time, and it put enough energy that it killed the telegraph operators because it came through the lines and zapped them, electrocuted them. And so they say that if that takes out the electrical grid, and we use electricity, I mean, that thing is, you guys can weigh in. We use electricity to cool the nuclear power plants, right? If you can't cool them, that's what happened in Fukushima, where basically they lost their backup generators and it melted down. And we have like hundreds of these things in the world. We have 50 or so running in the United States. What if 10% of them had a Fukushima because of this solar flare? Because what people think is that if you take out the electrical grid, it could take more than 3 weeks to fix, and these
Right.
power plants only have 3 weeks of
So,
backup.
so Thomas, you sound
Yep.
like a barrel of fun. You're my kind of guy. You're my new best friend. I got two new best friends today, you and Jack. So why don't you just stop for a second? I
Sure.
think I'm guessing Jack. Yeah, Jack is probably sitting there squirming, pounding his fist, saying, "Oh
Yeah.
yeah, he's forgive." Okay,
Oh yeah. Bring it on.
yeah. So let's get Jack. Jack, I don't know what part of that you want to address, or I interrupted Thomas. I didn't let him finish, but Jack, the floor is yours.
All right. So thank you. I was chomping at the bit there. The first thing about decommissioning, every nuclear reactor operating in the country is forced to pay 1/10 of a cent for every kilowatt hour of electricity that they sell into a decommissioning fund. And that sounds like a little bit of money, but that is a massive amount over the lifespan of a nuclear reactor. It ends up being in the hundreds of millions. When my plant closed in New Jersey, I used to work at the Oyster Creek plant in New Jersey. At the time, it was the oldest operating plant in the country. A company called Holtec bought the decommissioned plant because they thought they could decommission the reactor for less than the money that was in the decommissioning fund. So, if anything, decommissioning funds more than cover the cost to, they call it greenfield status, basically grass growing where the reactor was. Now, onto the fuel, you correctly point out that even after you decommission a reactor, they're still going to have what they call an ISFSI pad, basically these concrete above ground bunkers full of spent nuclear fuel rods. because there is nowhere in the world we're allowed to send them. In addition to that tenth of a cent per kilowatt hour into the decommissioning fund, the nuclear utility operators have been spending roughly a tenth of a cent per kilowatt hour of electricity sold into the nuclear waste fund, which is in the tens of billions now after several decades of paying into this fund. The money from that fund was used to build the Yucca Mountain Repository, which is basically a cave under a mountain in the desert in Nevada. Harry Reid, a powerful senator from Nevada, built his entire career around stopping Yucca Mountain from ever being put into operation. He installed a guy named Greg Jasko at the head of the NRC. Greg Jasko's first act when he took over the NRC was to kill Yucca Mountain. So right now, we spent all this money to build a place to put the fuel, and we're not allowed to use it. And so every year, every nuclear utility sues the government for the cost of storing their nuclear fuel on site because they've been paying the government for years to take it off their hands, and the government has not met its obligations. And that's all besides the fact that you can recycle this fuel like the French have been doing safely for decades. But Jimmy Carter put the kibosh on that because Jimmy Carter thought that was a nuclear proliferation risk, which it is not. So there's any number of things we could do with the fuel. We don't let ourselves do it because we're scared, and frightened people with lawyers are more powerful than scientists and engineers. And it's just another example of the analysis paralysis that has plagued this industry for decades. And it's, while I don't think it's a technology challenge, it's a political hurdle and a regulatory hurdle that gives me very little confidence that this next generation of reactors is going to get built.
Well,
Now,
the thing is,
one more thing, George, quick before we go. On the subject of the solar flare and the Carrington event, that event you talked about in the 1800s, it was called the Carrington event. Um, if there was a Carrington event today, the good news is you don't have to worry about the nuclear plants, because within 2 or 3 days, you're going to be beating your neighbor over the head for something to eat. Because if there's no electricity, there's no sanitation. Nothing happens when you flush the toilet. Nothing happens when you turn on the sink. There's no food in the supermarket. There's no gas at the gas station. All of those things are going to kill you way before the nuclear reactor will. So planning for an event like that, there's you might as well be planning for a meteor striking the earth at your
right,
nuclear plant.
right,
Not a
but
reasonable thing to plan for.
right, but then also too is what's also kind of amazing, and maybe just to get more coverage of this, the thing is like Corning, like you know the people that basically invent Corningware or whatever with glass and things like that, they've actually patented something that what's interesting is they developed a special glass that if you actually like take the glass and then in this molten glass you bury like spent like nuclear waste, it's savvy enough that as it overheats, it'll crack, but it's stable, and you could bury that or send it to space or whatever. But for some reason, the government doesn't pay them for their patent, and we should be using that to disclose it. But all I was trying to say is that places like Fukushima and all these plants, there's no that everybody says not in my backyard, right? Like, no, we're not going to dispose of that because they don't want it there because yes, it should be stable at Yucca Mountain, but then what if, but anyway, the thing is that it's a gigantic problem. Some people even say that you could take and just throw it in space and discard it. But all I'm saying is that the cost, it's almost like we went to war with Iraq, and everybody went to Congress saying this was going to cost us a couple million. We're going to make money. We were there for 20 years. It cost us $1 trillion. Everybody like lowballs the cost of these things and the public is always on the hook. If there is an overrun, the public will say, well, what can we do? We're on the hook. The thing is, all I'm saying is that there's this cost. We haven't really I don't think I've done George's back of the envelope to figure out what's the worst case for the cost. And all I'm saying is that we should be looking at that. That's all. And the other thing is that what's interesting is that, everything is like complicated. There was a long time ago a genius named Tesla, like not the Tesla, the company, but Tesla that came from Serbia. He came here and he was actually pitching it. Shame we didn't embrace some of his ideas. He actually embraced using DC versus AC. We're like using AC to like run our computers and all this because he was saying is that DC would be inherently cheaper because it has less loss. So, we were screwed by not doing a lot of things to make things more efficient. We're complaining we don't have enough power. There's so much power that's wasted just because we're using AC and all this other stuff. It's amazing if we couldn't put our thinking caps on and look at these very smart people that had good ideas in the past and kind of like resurrect some of the things that they thought about, because there's all these conspiracies that basically said that the coal, um, gas, railroad people were against Tesla because they needed to use more fossil fuels to make more profit. They really didn't want efficiency.
Thomas, Thomas,
All
Thomas,
right.
Thomas. Yeah, I really enjoy your comments.
Yep.
Save some of it. I
All
mean,
right.
this could go on for
I
hours,
know,
but
but thanks.
so Jack, I don't know if you want to respond to any of that. We can move on to another topic. Jack.
Tesla actually pioneered alternating current. It was Edison who pioneered direct current. So we actually did use, eventually, we used more of Tesla's ideas than Edison's. Uh, the last thing, Fukushima, the tsunami killed 20,000 people. The radiation killed 0 people. I mean, look, it scared the shit out of people. And, people were going on TV and selling fake herbal supplements that would protect you from anti radiation. It was all bullshit. All right. It was fear porn by the media. Nuclear power on a human deaths per megawatt hour basis is safer than any other form of generation, up to and including solar panels and windmills. People die working on those things all the time, actually at a higher rate than at nuclear plants. And look, we have decades and decades of nuclear Navy experience where we have men living in close proximity to very lightly shielded nuclear reactors, breathing air made by those reactors, drinking water made by them. And those guys are statistically healthier than the average person in the regular population. So, I mean, all of the safety things, there's real easy ways to scare people. There's industries that have created around scaring people with nuclear power with scary sounding stories and terms we don't understand about radiation. It's all bullshit. Nuclear.
Yeah, no, Jack. Let me ask you one question. I'm going to go to Kane. Jack. So really interesting. Great to hear you say all that. So then when I look at, so let's assume that's all true. I assume it is. So you look what the Chinese are doing, and they're building, I don't know, dozens of these freaking things now. And here, like you pointed out, it takes 10, 15 years to get one. So, like, isn't the answer to just, for all energy problems, just to go massively to nuclear? Like, what's wrong with that?
I agree. I think that is the answer. There is one massive hurdle that needs to be overcome, and that is the Nuclear Regulatory Commission. And the Nuclear Regulatory Commission, they are making changes. They're saying, yeah, we're promising you a framework for how we can build these new reactors. They don't do anything fast, and that is on purpose, and that is because nuclear moves slow. Because
Got it.
when nukes mess up, it's not a small story; it's a big story.
No, I get it. I get it. I get it. Thanks, Jack. Stay there. All right, let's move to Kane, and then I'm going to get Piccolo up here. Kane, what's up, man?
Good morning, George. Thank you for having me on. I just want to first start off by saying tomorrow night we're in the national championship. I think we got a very good chance of beating Indiana. I wanted to share a couple of ideas, stories. First of all, I started in the industry at 24 years old in 1992. So I'm going on my 34th year. And I worked at Smith Barney. I worked at UBS. I did a fellowship with Art Cashin. Everybody knows him. His office was next to mine, and he put me in his elite group called the Friends of Fermentation Group. I've had lunch with hedge fund managers, Ray Dalio, Dennis Gartman, Doug Cass, and I've all became friends with them. So I wanted to share with you my story with Telecom Jack. I mean, the man is a ganef. And for anybody who understands Yiddish, that means he's a thief. He came up into my office at 666 Fifth Avenue and said it to a group of financial advisors, AT&T is a short, it's a piece of dreck, and dreck means shit. He said, sell that and buy WorldCom. Okay. 2 weeks later, he upgraded his opinion of AT&T stock from a sell to a buy. And in a 2001 email, he explained the change was part of a plan to get his kids into the 92nd Y. And he was also advising AT&T and Global Crossing at the same time. And the man was barred from the financial industry for life for misconduct. So, secondly, I wanted to share with you uh, the almost $4.7 trillion that could flood into the economy in the next 3 to 4 quarters, creating the largest wealth transfer in the history of America. I think Trump's plan is to inflate our debt away. I think institutions are already positioned for it. The 4.7 trillion doesn't happen and hit all at once. I think it's going to come in five distinct waves. Wave one, you have the tax refunds that are starting in late February. Wave two, corporate repatriation. Wave three, bonus depreciation. Wave four, capex boom. Wave five, which is late in the year, we're going to have an inflation response. So, if I may, let me break down so everybody can understand this. So, a lot of people, when they did the big, beautiful bill, the withholdings from 2025 were not changed by the payrolls, the ADPs, and the paychecks. They're estimating that the average person could get anywhere from $5,000 to $8,000 in tax refunds. 2.1 trillion corporate cash should come in overseas, and you got about 1.4 trillion in accelerated depreciation. That's three times bigger than the '08 bailout and 20% of the entire US economy hitting in the next 3 to 4 quarters. And history shows when that happens, we had the cuts in 2017, George, 1.5 trillion. The S&P was up about what, 25 to 28%? The Bush cuts, small caps were up 47%. The Reagan cuts, the Dow was up 135% over 5 years. This is three times larger with record low employment, Fed rate cuts, and pent up demand. So now wave one, if you're starting to notice before the refunds are hitting, the small caps are outperforming. Consumer discretionary is rallying. The home builders are starting to percolate. In late 2016, before the tax cut, the small caps beat the S&P by 9 percentage points in 3 months. The front running phase, I believe, is happening right now. So now here comes wave two. You have money coming back into people's pockets. I know a lot of people have debt. Some of it will go to debt. Some of it will go to discretionary spending, travel, home upgrades. Some will save. Some will give it, they need it for essentials. So you're going to have the airlines, the hotels, the brokerages like Robinhood, credit card companies, Walmart, the Amazons. They should be the winners. And then wave three, which is going to come in the third quarter from July to 7th to September, you got the repatriation. You got companies that are going to bring money from overseas that reduce tax rates. The Apples, the Microsofts, the Googles. You're going to see stock buybacks, dividend increases, M&A, investment. The tech giants and the dividend aristocrats should rally hard. And then you got wave four. You got the capex expenditure bonus, the bonus depreciation. Companies write off investments immediately. Deere, Caterpillar, industrials, construction, infrastructure, AI automation benefit. Now, in 2017, the industrials surged about 30 to 35% from this exact catalyst. Now, finally, wave five, now we're going to have to figure this out. Is this flooding into the economy going to cause inflation? Trump's lowering oil, capping credit cards. Look, if salaries don't go up and stocks happen to run 20%, your cash lost 20% of value. So the shift to inflation, AKA assets, energy stocks, gold, silver, commodities. So the top sectors in the stock I'm looking at, I'm not giving advice. You got in the financials, Robinhood, Visa, JP Morgan, Energy, Exxon, Chevron, Halliburton, the consumers, Walmart, Home Depot, Amazon. So each wave favors different sectors, and timing really matters enormously. So, position by quarter, Q1 to Q2, small caps, consumer distress, retail. Q2 to 3, you got the Qs, the dividend stocks, the financials. Q3 to Q4, commodities, gold, silver, the miners, industrials. late 2026, energy. I think that we're witnessing the largest planned wealth transfer in the history of America. And this is going to create millionaires and this will destroy unprepared portfolios. So that's all I have to say.
Appreciate that, Kane. Very eloquent tour de force. I
I
guess
don't,
you touched on it. One comment I wanted to just, you triggered me. That all assumes that, I guess, hold on, just meet you right. I guess I'm concerned in that scenario you point out, and what's one of my risks for this year. I'm concerned it's a source of risk, but I think that that's all going to depend on a continuing, well-behaved bond market. And if things go in the direction of your suggestion, I just kind of think that at some point the bond market, long into the bond market's not going to cooperate. That's my
our mutual friend, John Rogue, always taught us the bond market never lies. And listen, I'm not suggesting you keep all your money in large cap because if you keep all your money in large cap and indexes, it's like napping on the train tracks. I mean, you got to be foolish to pay 37 times earnings.
yeah.
I
So
mean, absolutely foolish.
yep.
But I really think it's also going to have some risks involved, and let's see what the bond market happens to
Right.
do.
Cool. All right.
And that's it. I appreciate you giving me
All
some
right.
time.
Thank you. That's great. Okay. Let me just take a break right here. I want to ask you guys a question or just share my thoughts with you. I'm going to go in a totally different direction now. So, I started doing these spaces again recently. We did a lot of spaces going back, a few years ago, and I've done hundreds of them and raised a lot of money for charities, over $250,000 for World Central Kitchen. I'm in the process of transitioning a lot of my content over to Substack. I've had a Substack, but I haven't used it very much. I've stepped that up now in the last few weeks, and you're going to see more and more on Substack. And the more value added, higher quality stuff will be on Substack. Some of it free, some of it's going to go behind a paywall. Um, I'm happy to do these spaces, but it's been a source of frustration for me trying to figure out the cadence of the spaces as well as how long they should be. And to be very honest, I have I've said this before. I have a love hate relationship with this platform. One thing we didn't talk about yet, but over the last few days, stories come out about um, the way X is compensating people for ad revenue or whatever. I probably make $100 a month from this app. Okay, I don't do it for money, but I believe conversations like this are very important. We have the best spaces on X with that question, and it's not because of me; it's because of you guys. I know I can be a jerk, but people like that because I herd cats and try to keep the conversations from the straight and narrow and stay focused. But there's only so much time I'm willing to put into this, and if I'm going to put money into this, to be very blunt with you, it's to the point where I don't want to keep giving everything away for free. I was lauded for my spaces. Oh, this is great. You do this, you do that. Yeah, because giving access to people that you wouldn't get access to normally. All right, I was the first one to put Michael Howe on X, and Michael's been a friend of mine for, oh my god, going back 40 years. You bring John Roque in. I mean, I just got on the list. And yeah, everyone says, "Oh, it's great. Your spaces are great." Yeah, because you're getting fantastic content that others aren't bringing you. Who doesn't like a good deal? But I guess what I'm saying is it's been too good of a deal. And like sometimes you get to a point, I'm not blaming anybody, but if you keep giving and you're not getting, it starts to feel one sided. And that's kind of the way I feel about X right now, which is why I'm transitioning over to Substack. So there'll be I'll continue to X, but in increasing limited fashion. It's going to be more on Substack. A lot's going to go behind the paywall. There's going to be a lot more you haven't seen yet. That's going to go behind the paywall. If anyone has an idea of like how I should do this, because I do want to help the little guy and I don't want to charge for everything, but this has just been too much of a one-sided trade. And I'm not going to do something stupid like start a GoFundMe page or whatever. There's no way of putting this. I don't think there's a way of putting spaces on a subscription basis or whatever. But just bringing some of these people on it's just too good of a deal, and I kind of feel like it's enough already. All right. So if anyone has any ideas, speak up or send me a DM or an email, and because I'm looking for guidance here. This is all in the throes of being, in the process of being of figured out right now. So there you have it. All right, where were we? So hey, GM Global Macro, good to see you. What's on your mind? I don't know. I guess you can't hear me.
Can you hear me? Sorry,
Yeah,
George.
yeah, we got you.
Yeah.
Hey, good to see
Okay,
you.
sorry.
Good to see you. What's up?
Yeah, good to see you too. So I only have one recommendation. I just want to be sorry. I'm at the gym running. Um, I would implore all of you to go and download the 2025 National Security Strategy document that came out in November. It talks about U.S. Where it wants to stake its positions in the world. And if you read through the 29 pages, you will quickly appreciate and understand all of the sectors that they are going to be investing in and have invested in, and therefore pretty much a confirmation of the policy, the directive, and where they're headed. And so um, I'll land the plane super quick. They talk about chips. So it's no coincidence that they spent money, propping up Intel. Um, they talk about military subsegments, drones. They talk about space. They talk about uh, natural resources. They talk about biotech. They talk about key sectors, key industries that they believe of national security and national strategy of importance. And as a consequence, it is a blueprint, if you will, if you are an investor, not just a sort of a geopolitics kind of person, who wants to understand, how the US is sort of playing within the world, but it directly links all of the key themes in terms of the investment themes. So that's what I have to say. It's probably one of the most, I would say, transparent documents that I have read in over 30 years of following, US policy. And this one is so transparent that it almost leads you right down the path of, okay, what are the sectors? Where should we, taking positions, et cetera, et cetera. So this is a key document. If you are an investor, whether long-term, short-term, I don't care, you need to understand where the US is playing, what they deem of importance, and as a consequence, how that aligns with your investment thesis and strategy, because you may be putting money to work in places that um, the government and really the United States as a superpower has an interest. So that's it.
Appreciate that. And I'm going to turn to Jack actually to help answer this question. So I agree with you conceptually, yes. However, on the other side, let me talk about both sides of my mouth. I'm also going to say no, because historically, I mean, there's certain things the government should invest in because they're the ones best placed to do it. On the other hand, the government generally screws everything up, and so I don't have a lot of confidence in it. I'm a much bigger believer in the private sector. And so, look, and here's where the democratization of finance is going to gets you in trouble. So even if we agree that precious raw materials are an important area, space is an important area, et cetera, et cetera, et cetera. This is where the democratization of finance is going to screw you up, and the average investor is going to get completely screwed. So let's start with space. So, and Jack, I hope you're listening because I'm going to turn to you on this because you can probably speak to some of the other examples. So the space stocks have gone nuts, and so I get it, and that's fine. And if you said to me, hey, you know what, 5 years from now, space is going to be much bigger than it is today, okay, fine, yeah, no argument there. But the problem I have is you take something like AST Space Mobile. I'm just picking on this one, pick on anyone. $42 billion market cap. It's got no revenues to speak of. It's 30 times book. Even if this is a real company, there's a stock price, this price, and then there's value. If I look at MP Materials, which is a completely fucked up, troubled, garbage materials company, that thing's been pumped up to, I don't know, I think it's 12 times book or some crazy number. So I agree with your point. I think it's an excellent point. But then when you look at it, the retail investors gone and try to express this in the vehicles available to him in the public markets, there's just a huge disconnect. So frankly, most of the names that show up in these areas, I would never in a million years own them. I've missed them. And I'm highly confident that over anything but the short term, these stocks are going to be complete unmitigated disasters. I mean, it's just absurd. So I don't know, Jack or Ryan, if you want to say anything about that.
I'll take this one. The space stocks, honestly, when I hear people talking about space stocks, I picture Kathy Wood talking about Peloton or electric vehicles in 2021. I really don't agree with that so much. The rare earths is interesting. I think that is the world is being split in two, the West versus the East, and the East controls the rare earths. So I think, a company like MP Materials is not really a bet on the fundamentals of that company. It's a bet on the desperation of the United States military supply chain. And, you're talking about somebody with a money printer backing them up. And I think along those same lines, one thing that is not mentioned anywhere and should be, even in that 2025 defense document, which I was just scanning, is shipbuilding. And that's one of the few things I have gone long besides precious metals in the last few years was a company called Huntington Ingalls. They own the biggest shipyards in the U.S. Um, we are steamrolling towards a conflict on the water with the Chinese. And just to put this into context, in World War II, we had a 6-1 shipbuilding advantage ahead of the Japanese in World War II. In 1 month, we built 50 destroyer escorts at its peak in 1943. And the Japanese were so dumbfounded by that number, they thought it was propaganda. They didn't believe we could actually build ships that fast. That was when we had a 6-1 industrial shipbuilding advantage over the Japanese. Today, the Chinese have a 320-1 shipbuilding advantage over the United States. They put 320 tons of ships in the water for every 1 ton we can put in the water. And we're heading towards a conflict on the water with this country. We better learn and remember how to build ships fast. All this money that we're pumping in the data centers that are telling us to glue our pizzas together should be going into our shipyards. And it only recently have we begun to address this problem. It may already be too late,
Yeah.
but sooner or later, Uncle Sam is going to turn the money printer loose on shipbuilding, and that's why I bought Huntington Ingalls back in.
Yeah, Jack, if I could interrupt, shipbuilding happens to be one sector I know very well because I follow or should I say, know shipping very well. And I get, they may prop up some shipyards the same way they're propping up Intel, but I will just tell you from a competitive standpoint, first it was the Japanese, then it was the Koreans, now it's the Chinese. We don't stand a snowball's chance in hell of building ships on a competitive basis with these other countries. It's not even close. I mean, I don't want to completely bullshit you, but if I told you cost of building a ship here versus Korea is 3 times or some number like that, it's probably something like that. So, like, I get, it's open operations. Like, oh yeah, we want to have a shipbuilding industry. Yeah, that'd be a great idea. The only problem is if it costs us 3 times as much to build it as the Koreans, it's not going to happen. So, having said all that, I'm sure your hunting and angles will probably go up. So there's that.
Now, it's funny you should mention that because one of the companies that is investing in our shipyards right now, especially this one right here in Philly, where the U.S. mothball fleet is Hanwha. It's a South Korean company.
Yep.
A lot of this money that the Japanese and the South Koreans have promised to invest in the United
Yep.
States going into our shipyards. And those companies need U.S. shipyards because when the missiles start flying, those shipyards in Japan and South Korea and the Chinese shipyards are all going to have bullseyes on them. They're all going to be within range. And
Yep.
the one
Bingo.
big advantage U.S. industry had in World War II is we were nowhere near the front lines. And so, once that enters into the calculus, those Japanese and South Korean companies we can't compete with will be looking to build their boats here on our real estate where it's a hell of a lot safer than their own backyards.
Yeah, no, that makes sense. That makes sense. But again, it's funny you talk about space. I mean, you got a whole list of areas where there's just a complete. It's like I asked you a few, an hour ago, whatever. Regardless of what you think of nuclear, we could all agree that nuclear is going to be a big thing 10 years from now, and the way to solve our nation's energy problems is nuclear. It doesn't mean it goes to buy. And you probably could rattle off a dozen nuclear plays in the stock market which really are great shorts. And so again, this gets back to the democratization of finance. And I just, people think they know what they're doing, but like if you and I were to watch a YouTube on how to do open heart surgery, it's like, okay, George, I got this. I see how to do that. I got it. I'm good. I'm good. All right. So, you can, so what's really a shame is people can make the correct decision. Yep. Nuclear is the right thing. I heard this guy, Jack. Hold on, what the hell? Hey, GM, I think your thing is making weird noises. I don't know what the hell's going on here. Um, People can make the right fundamental decision. Energy is going to be a thing. Maybe nuclear energy is going to be a thing, but then pick the wrong instrument because some shysters on the street are foisting the crap upon them. So, like, imagine you write on nuclear, and then you went and you bought OKLO. Nuclear actually works, and then OKLO goes bankrupt. Like, good luck with that. But unfortunately, the shysters, and then the ETFs make it even worse. Because Jack, maybe you have an opinion. I haven't even looked at this, but someone was telling me the other day. I think it's probably right. I can check it easily enough. Just been too busy. But I think OKLO is like one of the biggest holdings in the nuclear ETF. So it's not even a question of some well-intended individual investor says, "Oh yeah, I want to buy. I'm going to buy OKLO. I studied the company, and okay, they don't know how to read the income statement or balance sheet. Okay, fine. No, it's worse than that. They're like, oh, I think nuclear is the future. I heard this guy Jack. Jack, I'm gonna antagonize you deliberately. You know, I heard this guy Jack. Come on, and he said he really likes nuclear, and so then I went and I bought the nuclear ETF. So in a way, Jack, you're in a backhanded way responsible for that guy getting along Okalo, right? It's disintermediation between the investor and the merchandise they're actually purchasing. And I just think it's criminal what's going on. Any you want to react to that at all, Jack?
I love nuclear technology. I believe it is the future. It is the safest, cleanest form of energy available to us. We should be building these reactors. All that being said, understand if you're investing in these nuclear stocks today, you're investing in data centers. You might as well own CoreWeave. You might as well own NVIDIA. It's the same binary bet. You're betting on data centers. And look, I'm looking at my former employer, Constellation, right now. They're one of the biggest nuclear operators in the country. They're trading at 35 times trailing earnings. This is a
What? Wait. This is a freaking utility on 35 times earnings?
yes. And look, ask a psychologist what happens when boring things get exciting. It usually means disaster is over the horizon. Utility stocks are bond market alternatives. The thing's trading at 35 times trailing earnings. Forward earnings is like 27, 28, something like that. But still, it's a utility stock. It belongs at 16. This is not.
This gets back to the my friends at GavCal, Louis Gav. He always talks about, if you have more money than fools or more fools than money, and it would seem that we have more fools than money right now. So this is what happens, guys. This has been great. Thank you, Jack. Thank you, Nikoski, Ryan, Gnostic, everyone. Those that aren't here anymore, Kramer, wherever you are. We'll do this again next Sunday at 11. Bye-bye.
Thanks, George.
Bye.